The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates. They don't tell us the APRs, points paid, points received. They only report locked rates with consumers across 42% of all mortgage transactions nationwide. Ever hear of a company that has a 42% market share? But OBMMI, they have it. 30-year conforming loans yesterday, they were up 7.183. 30-year jumbo loans, they were down 7.383. 30-year FHA loans, 7.005, down a little bit. 30-year USDA loans up just a touch, 7.052. And the 30-year VA loan, best loan on the market. You got to earn this one. You can't just apply. 6.905. And if you'd like to get our market commentary every morning, all you do is go to rsrmarketminute.com, rsrmarketminute.com. We email that out each morning early in the morning, rsrmarketminute.com. And let's take a look at what's going on now today. Those are all yesterday's numbers. I know we try to get as current as we can. 10-year Treasury up 5 basis points. That's problematic. We'll talk about that in a minute. S&P 500 is down 2.33. And we've got the mortgage-backed securities down 37 basis points. Ow! That means interest rates are going up again. Why is this happening? Well, we've got the Fed minutes. Those came out yesterday. The Fed staff no longer believes that the U.S. economy will enter in a recession. Yes, it will. But does see downside risks to growth. They also believe there are upside risks to inflation, as they are not yet sure they have won the battle on inflation. Many believe more hikes may be needed. Fed also mentioned that the labor market needs a balancing of demand and supply. I guess that means they need more people to be laid off, which means they want a weaker job market. As we have mentioned, the Fed may need to see a weaker headline job figure before calling it quits on hikes. Market believes the Fed is done hiking and only estimates a 12% chance of a hike at the September 20th meeting, but the market has been so wrong and has not believed the Fed for a long time now. If we see inflation temporarily move higher in August, on the heels of higher commodity prices, the Fed may hike again. Have you noticed what's happening with gasoline prices? Initial jobless claims measured individuals filing for unemployment benefits for the very first time fell 11,000 to 239,000. Continuing claims are those that continue to receive benefits after their initial claim rose 32,000 to 1.72 million. Clearly, from this standpoint, we are not seeing a weakening in the labor market as employers are holding on tightly to their employees they already have. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You need to make the call, 800-306-1990, 800-306-1990.